This video is to go over the 13.2 work together. We have 3 steps. The directions for the first step says use the selected payroll information from employee earnings records to calculate the futa taxes. Unemployment taxes are owed on the first $7,000 of earnings for each employee. So in this table here, they're giving us the employee name. They tell us the prior accumulated earnings. They tell us the earnings to equal the futa tax base and the earnings for current pay period. We then need to figure out the futa earnings. In the future, they fill this column in for us. In the future, though, we will need to be able to fill this column in. So I'm going to go through that as we're going through. So the way that I kind of remember this one is earnings to equal futa tax. Remember, our futa tax base is going to be this $7,000. So that's what we're looking at here, earnings to equal that tax base. So we're always going to take, to get this number, we're going to take 7,000 minus our prior accumulated earnings. So that's how they got 900 here. When we look at this one here, if we were to take 7,000 minus their prior accumulated earnings, we would get a negative number, and so therefore it's just going to be 0. This one, we took 7,000 minus their prior to get 2,620, and then the last one, 7,000 minus their prior accumulated to get 150. Okay, so you will need to know how to figure out this number in the future. This is going to be their current pay period, their earnings for their current pay period. And then what I like to do for this column 5 then is really we are just taking the smaller number between column 3 and 4. So what we're saying here for Nick is that we are still going to tax $900 of Nick's earnings. This pay period, he earned $762.50. So that means that we are going to tax that full amount for futa. When we look at Evan, Evan has already reached his tax base, therefore it's 0. So we can't tax any more of his earnings, it's 0. Virginia, we are still going to tax $2,620 of Virginia's earnings. This pay period, she only earned $527, so we're going to tax all $527. And then when we look at Carrie, we're still going to tax $150 of Carrie's earnings. Even though Carrie earned $849.50 this pay period, we can only tax $150 of that. So $150. Again, an easy way to do this is we're going to take the smaller number between 3 and 4. So here's our smaller number, here's our smaller number, here's our smaller number, and here's our smaller number. Okay, then we are simply going to be totaling up earnings for the current pay period and then our futa earnings. So for earnings for the current pay period, I get 3,179. Oops. And for my futa earnings, I get 1,439.5. And I'm going to grade step 1. Next step. Step number 2 says calculate the amount of employer payroll taxes owed for the May 1st through the 15th pay period. Use the employer payroll tax rates provided. So remember, we are just looking at the employer payroll taxes. So the number for Social Security and Medicare is going to be the same as the employee. So 6.2% of earnings, 1.45% of earnings. So I'm going to just multiply those. So 3,179 times 6.2%. I'm going to have to round on this. I get 197.1. 3179 times 1.45%. Again, I'm going to need to round. I get 46.1. Now when I look at my unemployment tax payable federal, my futa, I am not going to tax all of those earnings. I can only tax my futa earnings. So I'm going to take 1,439.5 times 0.8%. For futa then I get 11.52 after I round. And then I'm going to do the same thing for my SUTA. I'm going to take the futa earnings times 5.45%. So for SUTA, I get 77.73. To get my total payroll taxes, I'm going to add all of those together. And I get a total of 332.45. So I'm going to grade step 2. Next step. My third step tells me I'm going to journalize the employer's payroll taxes for the May 1st through the 15th pay period on May 15th of the current year. Use General Journal page 10 and memorandum number 46. So big thing that I want to point out here is we are not actually paying these taxes. We are simply recording them. They're all going to go into a liability account because we're not paying the government yet. We're setting this money aside to pay the government at a later date. This is just the employer's payroll taxes, not the employees. So the date that they give us is May 15th. And I am going to debit my payroll taxes expense. It tells me I'm going to use memorandum 46. And I'm going to debit that payroll taxes expense for the total amount. So 332.45. And now I'm going to credit each individual payable account. So Social Security tax payable, I'm going to credit for 197.10. Medicare tax payable, I'm crediting for 46.10. Unemployment tax payable, federal, crediting for 11.52. And then I have my unemployment tax payable state, and I'll credit for 77.73. My 1 debit should equal my 4 credits. I'm going to grade my final step. Save and continue. Now go on to the 13.2 on your own.